Focus. Ideate. Innovate. Enable. Money Control India FinTech Conclave. Connect. Ideate. Innovate.
Money Control's inaugural India FinTech Conclave featured power-packed discussions on burgeoning financial technology or FinTech landscape in the country, as it put the spotlight on defining trends to position the sector for transformational growth. The turnout for the event was eye-catching, from Union Minister of State for Entrepreneurship, Skill Development, Electronics and Technology, Rajiv Chandrasekhar, RBI's Executive Director, Ajay Kumar Chaudhary, to Zerodha founder and CEO, Nitin Kamath. The MC FinTech Conclave saw discussions on pertinent topics such as digital payments, market regulations, and lots more. Through fireside chats and deep dive panel discussions, Money Control's editors, along with India's top industry leaders, change makers, regulators, and unicorn founders, probed the biggest trends that are reshaping FinTech in India. Here is a quick recap from part 1. T. Koshi, CEO, ONDC, Nikhil Kumar, co-founder Setu, and Shalini Warrior, Executive Director, Federal Bank, shared their thoughts on how India is showing the way in terms of digital public infrastructure.
So can you sort of explain to a FinTech audience what digital public infrastructure is and why they should sort of care about it? Why is it relevant to their life?
Thanks, you're asking me to say the history. Okay, quickly, if you look at Mother Earth has 7 continents, and the last few years we have been developing the 8th one, the digital one. Some of the, and every country in the world was trying to take a place there. Many of them said, let me create huge private sector monolith, like the old East India Company. And so India said, we will have a different way. We will create a lot of, in the place that we want to acquire, we want to put the digital rails. On the top of which, let the innovation bloom. Let that not be restricted to, let there not be concentration. And that seems to be the big challenge globally. And every country, developed and the developing country, is struggling with concentration and its impact on the small business. And the control of the business owners is losing to the intermediaries. And so the digital public good is about giving the power back to the endpoints.
Lovely, lovely. So, Nikhil, do you want to tell us a little bit about the infrastructure that doesn't get talked about as much? Because we all have heard about the UPI story and, the payments journey. But India's digital public infrastructure or India's stack has a lot of other components that maybe aren't as leveraged by fintechs or, banks in the ecosystem. So can you kind of give us a picture of some of those and their applications?
Sure. I think we know, most of us know the basics of it, which is identity. We use Aadhaar, and we have payments. UPI is the talk of the town, so everybody talks about it. But there are additional things that have also happened with them, and fortunately or unfortunately, they don't get the same stage time as the others. So one great example, for example, is eSign, which is actually built on top of Aadhaar, which enables any business or an individual to be able to digitally sign a document. Another great example is BBPS. Shinjini was mentioning just some time ago about how hard people find it to make their bill payments. I'm pretty sure if you all look back in your own lives, 10 years ago, you would probably stand in a line and you would probably be making a bill payment. Or all of us have this memory of as a kid going to the electricity company or the phone company and making the payment. And 10 years ago, payment gateways and online started, so we used to do that. Now you can sit at home, you can be sitting right now and be making a payment. So that's another example of another digital public infra. Another favorite of mine, which again is not spoken much in the fintech ecosystem, though it's pretty much fintech in some sense, is actually GSTN. In 2017, when the government actually brought out GST as a reform, it's actually backed by a solid technology platform called GSTN. And India is probably one of the only countries which has an open API infrastructure for GST or its tax payments. In the US, there's almost like $100 to $200 million that's actually spent every year lobbying against building APIs.
Wow.
And in India today, 75% of tax payments tax filings that actually happen through APIs. People don't go to the GST portal to file their taxes. They use their own ERPs, whether it's an accounting software or a large company ERP. And that system talks through APIs to the GST backbone. And there are several examples of like these, right from Wi-Fi, healthcare, skills, education. I just want to give one more favorite example of mine on education. We all remember studying in schools, and we used to have textbooks either published by state government or CBSE, ICSE, whatever you're studying. And when you have lessons in your textbook, you used to have something like factoids or something which is written in a box, and it would give you some interesting tidbit about that lesson. Those factoids today are actually QR codes. This has been called as a way of solving, we all remember as kids we used to have doubts. We'll stand up and say, sir, I have a doubt, and so on, and the teacher tries to explain. Today, as we speak, most state governments in India, especially the progressive state governments, their textbooks carry QR codes, which are basically augmenting learning for children. So if you're, let's say, studying about some chemical composition and you had a doubt about it, you can actually scan the QR code and it will open up videos, it will open up games, it will open up 3 or 4 other things that actually help you learn better.
Actually, this can also be used for like financial literacy, for example, as campaigns based on the fintech audience here.
So there's so much happening around us. Just from a digital public infrastructure perspective, I just wanted to give a wide range all the way from financial services, healthcare, education, and so on and so forth.
As the sort of co-founder of a fintech, does digital public infrastructure make it easier or harder to work with banks? Because the core sort of question behind fintechs is what is going to be the nature of the relationship between banks and fintechs? And so what do you see is the role of DPIs such as AA or other infrastructures in changing that relationship? Right?
Well, I'll answer it in a light-hearted manner, and then. So one is like, fortunately, banks, they're obviously not technologists, so therefore DPIs are all baked in with APIs, so they have to partner in some form or the other. Having said that, I met first Shalini probably 6-7 years ago, and the discussion that we were having was how should the bank create an API program? What does it mean? What does it take to do this? And so on. And it's very important. I would just want to illustrate this idea of why DPI works. My hypothesis is that the whole reason why DPI works because they're all built as APIs. So you can't, it's DPI, so what is DPI? It's not an object, it's not a thing. Finally, it's actually an API, right? The way a bank uses Aadhaar is through an API. The way a fintech uses UPI is through an API. The way e-signers is used through an API. Like I was talking about GST, it's used through an API. And APIs, for what it's worth, what is it doing? It's basically enabling 2 software applications to talk to each other. It's a language, it's basically. And if you look at modern infrastructure companies or banks or any industry APIs have enabled banks, in the case of financial services, to scale partnerships. Because if, for example, Federal is a great example, right? So if they're able to build a savings account API, now they are able to support 2 of the top neobanks in the country and enable them to scale these partnerships. And maybe there could be a 3rd neobank or a 4th neobank or a 5th neobank because the underlying infrastructure for that has already been built. So it's very important to understand that building this API infrastructure is a way to scale partnerships in the modern digital world that we are living.
Next up, Subramania SV, co-founder and CEO, Wisdom. Praveen Jadhav, founder and CEO, Raise Financial Services. Prakash Gagdani, CEO, 5paisa. Nikhil Agrawal, founder and CEO, Grip. And Radhika Gupta, CEO, Edelweiss AMC, discussed navigating the regulatory landscape for fintechs.
How are fintechs basically taking the right product to the right customer in the right possible manner? So, Nikhil, let me start by asking you. You own Grip, which is an online bond trading platform. I mean, we've had stockbrokers for many years, but getting bonds online to the retail customer is the newest animal on the fintech street as far as financial investments are concerned. And you typically characterize the fintech space that innovation happened, a new idea came about. SEBI watched you. SEBI said that, okay, this is an interesting proposition. You're dealing with the retail investor, but you're not yet regulated. So let me now come in and regulate you. So SEBI came out with a detailed set of guidelines in November, articulating what online bond trading platforms can do, number 1, 2, 3, 4, and what they cannot do. So if you can just give us a sense of, how things changed, because, a lot of online bond trading platforms were already there in circulation, a lot of exotic instruments were already there. So how did you revisit the drawing board? What did you stop? What did you restart? And how did you make that transition? Not just for Grip, I'm just saying for all your peers.
Sure. Thank you. I think, just from where you started the question, as a founder of most fintechs, I think the first thing is the intention is to run away from regulation or regulator because it always feels overbearing. And in the desire to grow fast, you believe that this is something that is going to weigh you down. I think what has changed for us, and that speech that the SEBI chairwoman gave, was to say that regulation can be inclusive. And if you move in the right way towards the spirit and philosophy of regulation, I think that's the opportunity to create a large business. Otherwise, you're just operating in the niche. The bond trading platform regulations are an incredible step forward in that direction. Right? I think they've tried to do two things, and I think everything that has been said in this conference today and that we have seen from regulators and government is to achieve a balance of two objectives: allowing innovation to happen while protecting the interest, especially of the retail user, of the retail customer. The bond regulations enabled a reduction of 90% in the face value of bonds from 10 lakh rupees to 1 lakh in face value. At the same time, which is great for market development, but at the same time said only listed rated bonds must be available so that there is KYC, no anonymity, and exit is possible. I think that balance was achieved and actually gave in a way, a stamp of approval to say, let's make this industry viable, let's deepen the markets, but keeping in mind certain frameworks and guidelines. To our extent, we've been able to now only focus on those bonds. The clarity exists, right? And clarity is great for business. So we've been able to move on our platform, on the bond side, to only listed rated bonds that are available. In fact, we've also set a criteria internally that it will only be A-rated bonds, right? And hence give a further curation.
Only rated A and above.
A and above rated bonds. I think that's number one. And definitely there are steps that we need to take for compliance reporting, but I think that's good for business. I don't see any big company getting built in any fintech sector across the world without taking those steps for regulations. It's processes. I think the second part which we've been able to change in the last 6 months is look at the spirit of what SEBI is saying, and can we introduce other fixed income products that also meet that spirit and that smell test. We've been able to introduce a securitization product, which is also listed rated on the market, and that has become interesting for users to participate in. Right? I think a lot of our peer set are now thinking in the same direction, and the combination of having a license, having a clear set of framework in which to operate, will allow more people to create products that will actually benefit the ecosystem.
Radhika, we've had, you've spoken a lot about bonds. You have, thanks to your Bharat Bond Target Maturity Fund, and you've been selling bonds from a mutual funds perspective. we've had, we know anecdotally that investors understand equities better than fixed income. And, debt is obviously can get complicated. Even fund houses have got, their, debt calls wrong at times. And we have had, of course, a few accidents in the past 3-4 years. So one is obviously Nikhil was elaborating upon innovation and reduction of face values, et cetera. But do investors understand fixed income well enough for this innovation to work? I mean, there are two sides. One is that, of course, there is innovation, but the other side is people don't understand. So is it really required, or what can online bond trading platforms do to sort of make the experience easier for investors?
So you had to start by throwing curveballs at me. My only plan for this panel was to have fun with Kezad, but he switched that game. Look, I have probably been the flag bearer for innovation in the bond market. And I want to make 2 points here. One is there a need for innovation, effort, rethinking, retooling in the bond market? Absolutely. I think so much of the narrative around the last 3-4 years about new investors coming into the market has been equity. And there's no taking away from the hard work that has been done there, and it's necessary, and it has a lot of good second-order impacts. But Indian consumers are fundamentally savers. And you have 150 lakh crores sitting in fixed deposits. You have so much money sitting in insurance products. I mean, tax has changed, but in the guise of long-term, debt investment. Is there a space for reforming bond investment? Absolutely and completely. So, and by the way, I do think, and we have had multiple conversations with the regulator beyond Bharat Bond in thinking, I think the regulator also wants that. So deepening the bond market, rethinking about the bond market, I think is something that is important to everyone. Now, on the second point, I do believe bond investing should be simple. So to your point, Kezad, anecdotally, as a product manufacturer, we've seen that if something goes wrong in an equity fund and you have a 20% cut in a small cap fund, or any of the stockbroking guys will tell you if there's a 30% cut in a stock price, there's not hue and cry about it because consumers understand equity risk. At least I think Indian consumers understand equity risk. Consumers don't understand bond risk. Indians come from a fixed deposit mindset. So they take the fixed word and fixed income very, very seriously. We know that when liquid funds are negative for a day, it creates a furor. So the steps the regulator is taking are welcome. And I think bond platforms, and I've spoken to multiple of them, really have to think about a couple of things. One is the selection of bonds that you have. I'm very encouraged, by the way, to hear that now there's a filter that's single A. In my opinion, that should be more than that. But anyway, I think at least a credit-based filter is important. The second thing is liquidity in bonds. So to the chairperson's point, as large institutions, we already struggle with liquidity in the bond market. So if it's difficult for a consumer to exit a bond product, I think that's the source of hue and cry. And even in our own industry, I think the issue has not been credit. The real issue happened in fixed income when there was a liquidity issue, and we know what we're referring to. I think two, and the third is transparency and disclosures. And I think historically, when you look at issues that have happened around fixed income or arbitrage products, even things like NSE, they have somehow fundamentally been related to transparency. So my concern with online bond platforms is if you're selling a high yield product, sell it as high yield. And make sure the consumer knows that it is high yield, and that is what high yield can entail. And if you're able to get this right and innovate with right selling, then I think it's a very powerful construct.
And liquidity also, you said it's very...
liquidity is extremely important because finally our consumer is a fixed deposit consumer, and the promise of public investment products is liquidity, is that I can get my money back without thinking. And when there is a liquidity event, it sets all kinds of questions in the minds of the consumer.
Money Control India FinTech Conclave. Connect, ideate, innovate. Money Control India FinTech Conclave. Connect, ideate, innovate.
The event came to an end with Deena Jacob, co-founder and CFO, Open, Madhusudan E, co-founder and CEO, Credit B, Gaurav Kumar, founder and CEO, UB, and Amit Mande, Chief Revenue Officer, Ugrow, as they shared their thoughts on how lending is the next big fintech frontier.
Amit, if I can come to you, I think SME is the red hot segment in terms of lending itself. There's a lot of promise. There's also a lot of push from the government, in terms of to promote, SME businesses. And account aggregator is seen as the, magic wand, if I can use that, to actually accelerate, the whole access to finance for SMEs. Are you seeing early adoption of account aggregator in a meaningful way, or it's still in a POC phase that we'll have to navigate, some more before we get there?
No, so there is surely adoption. The adoption is on both sides. One is on the lender side, one on the consumer side as well. But it's about just a year since this concept started, so it's surely evolving. If one were to look at it in the early stages, not all data was coming in the right format or the right manner that we wanted. Early stages, the line products from the banks were not integrated, and so the data was half-baked. Today, I think the data integrity is far higher, and therefore the ability of a lender to look at an account aggregate data is far higher. That's number one. Two, more and more data will come in through the account aggregators. So GST has already been brought into the regime, the capital markets regulator has already signed in, mutual funds and insurance companies will sooner or later come in. So what account aggregator is finally going to be one source of financial data for a business need. Right? So when I said the adoption, there were impediments. There were these concepts about some line products not coming in, some banks integrated, some banks not integrated. Today, if you look at it, an individual ping has about a 90% positive rate. But there's still a long way to go on the ping on how does this data come for entities like a partnership or a private limited. So that's still yet to be solved. So it's an always evolving system, and I think as the system evolves, the lenders will have to keep evolving their tech stacks and their credit models to adapt to this process. The second piece about adoption is also at the consumer level, and there's a lot of education that needs to go at the consumer level because it's still about creating an account, getting OTPs, and the consumer is still worried that all these 5 accounts will be visible to somebody. That's not the culture that we are an MSME lenders, and that's not how an MSME is wired to show clearly, be transparent about all these 5 accounts. So that education and adoption will take time, but eventually I think this is the way how MSME lending will happen in the country.
Traditionally, you've had SME business loans characterized by segment, right? So I could be, let's say, a trader in a specific segment. So there is a certain set of lenders who kind of service, that industry as a whole or that ecosystem as a whole. Are you seeing new, cohorts of companies or businesses or business models getting underwritten? I'm not even alluding to what, the earlier conversation around AA and all that, but are we truly seeing the emergence of new segments being underwritten because of GST data and whatnot, which otherwise was not present maybe even 2 years ago?
So one has to look at it in terms of what are these segments and what is servicing these segments. Are there specific ecosystems that service these segments, whether it's in supply chain, whether it is on their own digitization of product? And is there data available to therefore extend credit? So there have been multiple different ecosystems that work either in pharmaceuticals, either in manufacturing. There are a lot of examples of aggregators, demand aggregators, who have been working typically in one commodity aggregation, who've then integrated backwards to provide credit to that kind of customers. So absolutely, sectoral focus of either a ecosystem or an entity, therefore allows it to entrench itself better there, and therefore the pie kind of keeps increasing because there is very sector-specific, ecosystem-specific data available. And that's happening across. So a lot of banks and BFCs have been therefore partnering with either these fintech ecosystems, let it be payments ecosystem, e-commerce ecosystem, supply chain platforms. That's where people are partnering to be focused on certain ecosystems. If you want to get into a complete apparel industry, then you will therefore partner with the e-com apparel giants and therefore go into their ecosystem. So absolutely, data apart from just banking and GST, this alternate data is very crucial and is the fourth layer. So the three data that are democratized today, the bureau, the banking, and the GST. And this fourth layer of data, which comes from a particular ecosystem, just helps lenders focus on the ecosystem. So the lenders will keep entrenching themselves in multiple ecosystems and therefore ensuring that the credit really goes to the last mile with an informed decision.
Fantastic.
Money Control India FinTech Conclave. Connect, ideate, innovate.